Welcome to another VSA Capital podcast. And today I'm very excited to have a very special guest. It's Alasdair Haynes, who is the CEO and founder of Aquis, the Aquis exchange, and actually various other parts of Aquis. But Alasdair, hello and welcome.
Well, Andrew, thank you very much indeed. Really looking forward to the conversation.
Yeah, well, I think it'll be pretty exciting because I know that I personally am also very excited by what you're doing. And of course, you are a disruptor, aren't you? So, and I love disruptors. They're fun people to talk to. But, look, we're going to chat for about 20 minutes or so. But why don't you very quickly, for the first 2 minutes, just quickly explain, what Aquis is all about in a couple of minutes.
Okay, fine. Aquis Exchange, I set that up in 2012, and we are a competitive stock exchange. And there are three elements to our business. One, which is the original Aquis Exchange, which is an MTF, and that means that we trade 1,700 stocks across the whole of Europe in 14 different markets. We have a technologies business, which we sell and license technology, exchange technology. And of course, recently we bought the Next Exchange, and we've got now the Aquis Stock Exchange, which is our primary business. And the original business, the Aquis Exchange, is different, fundamentally different from every other exchange in the world, because we operate a subscription model. And subscription models change human behavior. They've been the most successful model over the last 15 years in industries such as when you look at telecoms, or if you look at the film industry or the retail industry with Amazon Prime, or the music industry. And we think that in every case, it has changed behavior in a way that's increased the underlying asset. And if we want to create greater liquidity in equities across Europe, then what better way is there than actually introducing the subscription model? And maybe it's my ancestry of being Scottish, but the marginal cost of zero has an incredibly attractive appeal for people. And of course, that's what has happened. And today, we're the 6th or 7th largest exchange in Europe by value of turnover.
I mean, let's just pick up on that point, because you are an exchange. I mean, one thing that people might not really appreciate is, I think, correct me if I'm wrong, there are actually 5 formally regulated exchanges in London, and it's very difficult to get a regulated exchange, but 4 of them are the London Stock Exchange, aren't they?
Well, we're the only other regulated investment exchange, and there are a number of licenses in London, but actually that trade and allow the secondary and primary listing of a company in the UK. So really, the choices that a company has when it's looking to raise capital is either to go to the London Stock Exchange or the AIM market, or now to come to us. And there have been attempts in the past. We've seen this with Next Exchange, which we bought the license from. We bought the company, or whether it's been Plus Markets or ISDX. And in truth, none of those have actually succeeded. And I think this time it is very, very different, because we're going to use the things that have made Aquis Exchange, the original business, successful, which is using technology, having transparency, and using innovation and being innovative. And I think that's part of the problem of why we've seen such a decline in primary markets over the last 20, 30 years, is because when you have monopolies running the primary business, there fails to be innovation. And that is something we are going to change, and actually are changing. And then it's very, very exciting. I mean,
it's a key point of yours, really, isn't it? It's that, an exchange per se is just a utility, really. I mean, whereas you come to it from a technological background. I mean, this is really a tech development that is a tech transformation.
Absolutely right. And I mean, let's look at it. Companies, great companies, they start small, they grow, and they mature. And there should be a different mechanism of trading, a different listing or quoting requirement to go public for a company that is, say, 5 or 10 million market cap, to a company that's 100, 150 million market cap, to one that is 1 billion or 2 or 3 billion market cap. And the problem we have today is regulation is not proportionate, and it's not necessarily appropriate. So what we do see is a one-size-fits-all, which is really bad, because when you're raising capital, that is not appropriate. So what we are doing is we are segregating the market into those components to make proportionality in regulation and appropriateness in trading mechanism, to allow people to be able to bring their company to market, raise the capital that they need in the right segment.
Look, I'm a big fan of that, actually. I think you're so right. Regulation at the moment has just got so all-consuming for And it is, as you say, the same for a company that's worth billions as one that's worth a few million, and they just cannot cope with it anymore. But let's just move to a little bit of the nub of it, and I'm going to throw in a few what I would deem as perhaps tricky questions, but I'm sure as a good cricketer you'll just bat them off and hit them for. But you know, we are at VSA an Aquis advisor, and we're a fan of it. We do work with companies on Aquis, but I get hit with, shall we say, certain criticisms the whole time, and I want to address these directly with you. Now, the first is, and I do think this is a major problem, is that, you know, if I pick up my mobile phone, I want to be able to look at the price of my stock and potentially also trade it on my mobile phone. This is very much as a retail investor. And, you know, the fact of the matter is that an awful lot of the so-called platforms just won't trade Aquis. You know, how are you going to solve that problem?
Right. Well, this goes back to the three things of technology, innovation, and transparency. For us to succeed, we have to do three things. One is we have to get retail and institutional investors trading in the stocks and investing in the stocks that are on the Aquis Stock Exchange. We've got to raise standards and make absolutely certain that these companies that advise or are the mechanisms for retail investors to trade realize that the stocks that are on our platform are of the correct standard with the right corporate governance, and that they are in many cases higher standard than you'd see on the London Stock Exchange. And of course, the third thing is liquidity. You've got to have liquidity there. But you can't get liquidity unless you do two things. One is you have to have market makers providing it, which is providing capital for the retail investors. And as you just rightly said, you've got to have brokers that are connected to it. Now, that is a technology solution. And already within the 6 months of since we bought the Next Exchange, we've moved the technology onto our own platform. We are a fintech company, as you said, and we are going to make absolutely certain that the execution-only brokers have access, because I have that vision. The whole purpose behind the subscription model is that anybody around the world should be able to trade any asset class off their smartphone for just a few pounds, dollars, whatever it is a month under a subscription. So we are totally aligned as to how we do this. Now, this has to take some time.
It's a case of seeing it, isn't it, though, Alasdair? Because, you know, you've been there 6 months. What's going to make it so that, you know, AJ Bell, Hargreaves Lansdown do it? I mean, I think at the moment, Barclays Smart Investor, you can. And maybe everybody just has to sign up with Barclays and ditch Hargreaves and AJ Bell and let them go bust. And we'll all just deal with Barclays. But what is the solution?
Well, I think firstly is they've got to be good companies on the platform that people that people want to invest in, and there are. And I don't think that they are well known enough today. So it is the exchange's job to make quite certain that the Chapel Downs, the Shepherd Neames, Racecourse, some of the cannabis companies, the biggest cannabis companies, Sativa Wellbeing or Rutherford Health, the Proton Cancer Therapy Treatment. These are great companies, and they're all on the Aquis Stock Exchange. And we need to be able to make certain that the retail investors can actually have that access. So how do we get Hargreaves Lansdown? How do we get AJ Bell? Of course, we're talking to them. But what they've got to realize is that it is in the interest. There is huge pressure from government, from Treasury, from regulators today to enhance the SME business. And that enhancement is only going to come through strong competition. So we need to prove to these people that we have got the right standards, that the data is freely available, that the technology is easy for them to use, so that you can just pick up your AJ Bell, app on your smartphone and be able to trade. Now, we are in the process of having those conversations. And you're absolutely right. One or two of the exo brokers today, you can come and trade. Is it as efficient in the way that we want it to be? Absolutely not. But we can continue to push with those people. And you're right, at the end of the day, the same way as we built our exchange platform for the large cap stocks, making us the 6th or 7th largest exchange, is because when you talk to the customer's customer, in this case, the retail, they are the drivers of change. And it is through them that when they realize and recognize they want to invest in new companies that are being quoted on our marketplace, there will be demand. And if an AJ Bell or Hargreaves or Halifax doesn't have the capability of trading, they will lose that business. And guess what? They change pretty damn quickly when their customers say, do you know what, I'm moving. So it is a chicken and egg situation. But I think because, maybe it's because I'm old, but because we've done this for so many years in so many different sort of equity businesses in the past, we sort of understand how this trick works. And it is a question of making certain that you've got everything aligned. And one of the things, and actually the first time I say it on a live video, because the press release is literally coming out, is we're bringing in an incentive scheme for market makers for stocks in our Apex market. Now, why is that important? Because we've already got 6 people signed up, and I think there will be more, who are going to compete as market makers with the intention of being rewarded with the possibility of buying equity into the Aquis Stock Exchange, not Aquis Exchange PLC, so there's no dilution or anything, but they have an opportunity to buy into the stock exchange business, which is going back many, many years. As you and I will remember, the early days when the markets were much more liquid was competing market makers. So you get 6 or 7 market makers competing in these stocks with a maximum spread for retail, which is one of the things we're bringing in, a maximum spread of 5%. That will make us, for comparative stocks on the London Stock Exchange AIM market, far narrower and far more liquid. Now, if you've got the right stocks, or if some of those stocks decide to move over from the AIM market to the Aquis Stock Exchange because they want more liquidity, they want to see narrower spreads, they want to get the retail market, then guess what? They'll move on to Aquis. And then guess what? The XO brokers who aren't connected will have to connect. And it's not as though it's difficult. We've made the technology very, very simple for these people. It's not the old sort of clunky technology that we've had, that these exchanges have seen in the past. This is some of the most advanced technology that's built in the world today.
Well, you've already answered my second question, which is how you get the market makers to create this liquidity. And a 5% spread would be fantastic because, as you say, that's better than a lot of stocks on AIM. I've just been talking to the chairman, actually, of an AIM company with 100 million market cap, and his spread is 10%, which is just a joke, to be honest.
We're a 120 million pound market cap company, and our stock today is around about the 10% spread. And it's laughable. You know, we're on AIM. As are, you know, the 840 stocks that are there. You know, we have the same privileges on the Aquis Stock Exchange growth market, which are things like no stamp duty, you know, IHT relief and all these different things. But the stamp duty argument is laughable. Well, we save 0.5%, but the spread is 10% wide. You know, that doesn't to me make any sense whatsoever. Why would a retail investor want to do that? You have to have tighter spreads. You have to be able to trade. And that's what I'm so excited about this, because the first time I think we've got a very clear plan of what we want to do here. We've got the answers to many of the questions, and I think the hard questions. How do you get retail? How do you get institution? How do you get liquidity? How do you get connectivity? And of course, you know, I don't know much, but I do, having spent 40 odd years in the equities business, understand what is required of an exchange and the technology needed to build that exchange. And I think that's the one advantage we've got over the previous attempts, is we've got a very strong, successful technology business and exchange business, so that we can use that innovation and technology and transparency to the primary markets and change something that, in my opinion, is broken and absolutely has to change. Because primary markets should be the first port of call for a company to raise capital, not the last port of call.
You and I are...
That's what needs to change.
Yeah, total believers in this, and the whole principle of exchanges is all about the primary markets and raising growth capital for companies. But now the third question I was going to ask you, I asked one, you answered two before I got there, which was the market maker. The third one, I'm actually going to half answer for you, but I'll let you finish it. But that is that actually you need to have proper institutional support for a proper market. And, you know, in the old guise of NEX, etc., there was really no institutional support. Now, I happen to know, because I'm hopefully, I've been pre-marketing an IPO, which we're going to do on Aquis at the start of next year. I think it will be the IPO of 2021. I have been pre-marketing to institutions like Schroders, AXA, Chelverton, Canaccord Genuity, Trium. And what I have found quite extraordinary, they all want to do Aquis. In fact, they don't just want to do Aquis. They are very, very excited about doing Aquis. They see it as a breath of fresh air compared with the, dare I call it, the AIM casino. So I know that institutions do want to play, so long as their one criteria is, you've got to bring us a good company, Andrew. We don't really mind which exchange it's on. In fact, we are pro-Aquis. So I'm verifying what you're now going to tell me, which is that actually you have got institutional support, haven't you?
We have, and in fact, there's a website on our website. You'll be able to look in a matter of days' time. A number of institutions that have voluntarily said, "Look, we are interested in investing in companies." Now, some compliance departments, and a couple of the names you said, have not been able to put their name on that list. So this list is clearly way bigger than the list that we're actually going to show. But there are companies out there that have already invested this year. We've done 5 or 6 flotations already this year with some great businesses. You know, British Honey Company had money in from Octopus. It had money in from Unicorn. I think this whole concept or perception that because Aquis Stock Exchange has bought the next exchange, that no investor will actually invest in any of the companies. It just isn't true. And it is so important. As I said, those three things, you have to get institutional and retail investors both in the IPO as well as in secondary trading. You've got to raise standards. And I thought very interestingly, when we spoke most to the institutions, it was all about you've got to force corporate governance on these companies. They want to see that these companies are signing up to either an FRC UK Corporate Governance Code or QCA Corporate Governance Code. And everything in Apex, which is our slightly higher, the 10 million to sort of 500 million pound market cap range, every single one of those companies is going to have to sign up to a corporate governance code. And that's essential if you're going to get the asset managers to back and invest in these companies. But you have to have liquidity. So hence, you've got the market making scheme. You have to have the standards. And one of the things we're doing with those companies is changing the rules. Again, bringing appropriate and proportionate regulation. But I'm a great believer that the retail market should have access at IPOs. And it shouldn't just be once you're secondary trading, can you actually come in and buy, but you ought to be able to participate in an IPO. Now, in the past, you've only ever been able to do that by writing a full prospectus. But there is a thing called the EU Growth Prospectus, which is a quicker. And if you use technology, again, it's back to using the technology, you can template these things. You can actually produce a prospectus that is probably cheaper than today's admissions document. But again, it's about innovation and templating and working with lawyers and accountants to get those standards high, but actually not necessarily at the same cost. And if you have, as you will with Apex, the growth prospectus, then you can sell straight away at the IPO to retail. And of course, without retail, you don't get the liquidity that you need for the secondary trading, because retail flow enhances wholesale flow, and the two have to work in parallel. So it is absolutely clear. While I've answered your question about retail, with your wholesale question about how do you get the asset managers, the answer is you will get the asset managers because you'll have liquidity. You will get the asset managers because you've got the right standards of corporate governance. And because you have all of that, you will get the right type of companies. And the companies that we've talked about with yourself are the absolute perfect company that I think is interesting for retail and interesting for wholesale. And I think will be the companies that are the future for Aquis Stock Exchange.
Well, again, I can verify we're writing a growth prospectus for the Aquis market as we speak. And yeah, it makes a huge amount of sense. And I can also verify that I did a placing on Aquis 2 months ago in a company called Tectonic Gold, a small gold exploration company. Can you make money on Aquis? The investors in that placing have already made, I think, 7 times their money in 2 months. So Aquis is also an exchange where you can make an awful lot of money. Now, let's just wrap it up a little bit. I talk to people about Aquis and I call you, the Nasdaq of London, because I think that people forget sometimes that Nasdaq is also a very new market. It actually was set up as a sort of over-the-counter market in, I think it was 1971. And really it came to life when Microsoft floated on it in 1986. And then suddenly it became this high-tech market. And of course, actually now you get a much higher rating by being on Nasdaq than you do on the New York Stock Exchange. I mean, is that a fair comparison to call you the Nasdaq of London?
I think it is the right comparison. And you obviously listened to the earlier meetings that I had with my board when we were talking about the purchase of Nex, which is exactly that. We want to become the Nasdaq of not just London, but actually Europe. We're starting with London because we think there's a real issue with raising capital for SMEs. But the issue is also the same for SMEs across Europe. So we actually want to be the Nasdaq of Europe, in effect. Over a period of time. And our objective is always to be one of the leading exchange services groups. And that means primary and secondary trading of equities. And the purchase of Nex for us is an absolutely transformational deal. And I think with the expertise, the technology, the support, and the willingness of the community to change, we can't do this unless we get not just one Andrew Monk, but hundreds of Andrew Monks out there who truly believe that this change is going to take place. And when we do that, then we are going to be, and I still believe it can happen, the leading exchange in Europe for growth companies. And in fact, we call ourselves the home of growth companies because that's what we believe we are.
the thought of hundreds of Andrew Monks is a pretty horrific thought.
It is a pretty frightening
put
thought,
that
actually.
straight to bed if I were you, Alasdair. And look, I guess, you know, actually with Brexit coming up as well, you must be feeling quite comfortable that you are a UK exchange and a European business. You know, you fit in quite comfortably to where the world is currently going.
Well, we did. We set up an office in France, in Paris. We got our regulation out there as well. So, you know, I don't like what Brexit is going to do to the financial services industry. But from an Aquis position, we feel very comfortable that we are fully prepared for any outcome. But I think, you know, it goes back to this point about liquidity. Liquidity amongst competing entities under a single regulation is really good for the end investor. But liquidity that is fragmented among many, many different jurisdictions is really bad for the end investor, because no doubt prices widen. History has shown that in the past, and the costs go up and the end investor loses. And that isn't a good thing. So, you know, you don't run an exchange unless you're an eternal optimist, but I do believe over a period of time that Brexit will be just one of those things in history, and that we will find mechanisms whereby liquidity will get stronger and stronger. And it will be driven, I'm absolutely convinced, by the success of the retail players.
Well, again, maybe just to wrap it up, we've done about 20 minutes. You know, you do actually already have, as you mentioned, some very interesting companies on the exchange, like Chapel Downs, make some fantastic wine. You know, Shepherd Neame, some really good brewing companies, as you say, Newbury Racecourse. They're all things and companies that retail is interested in. And I think, you know, that to me is, again, another part of the key, is bringing these quality companies that everyone, retail and institutions, are going to be interested in. And, you know, I'm personally very, very excited about it. I can see that you're excited about it. I actually think that everyone will get excited about it. And I think 2021 is going to be the year that the Aquis Exchange really does take off.
Well, I hope you're right. I believe you're right. And it's up to us now to stop, you know, talking the talk. We actually have to walk the talk. And that is the most important thing that any entrepreneur can do, is you say you're going to do something and then you prove to people that you go out and do it. Well, I have total faith in you, Alasdair. It's been great to talk, and I wish you genuinely the greatest success going forward. Thank you, Andrew, very much indeed. Been a great pleasure. Thank you very much.